Boy, that time flies when you're having fun, doesn't it, guys? It's about that time of day again here, folks. Hope you all had a great weekend, but time to get back to work here this afternoon. It's Monday evening. It's February 25th, 2019. My name is Joseph, and this, of course, is your nightly newsletter. You know, I help traders of all shapes and sizes earn predictable, reliable, dependable profit using a simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight is to identify the most reliable, dependable opportunities I see setting up for tomorrow, Tuesday morning's trading session. And we're going to cover oil, S&P, Nasdaq, gold, and of course we can't forget about that mighty euro. I'm going to jump in first tonight on the oil market. Oil had a real big bloodbath going lower here. Boy, I wish every time I complain about high prices they drop those prices for me. We heard some rumors overnight from the White House that our President Trump was complaining about prices being too high, and sure enough, right, this market just collapses here. Like I said, I wish they would bring prices down every time I complain about the higher prices. But nonetheless, though, a bear market here down on the oil here tonight, on the crude. You know, there are ultimately three scenarios that I'm looking for tomorrow on oil. We're definitely bearish, but there's two big things. One is a real big strong move lower, and usually anytime we see a strong move down like this, the following day goes sideways inside of a range. The second thing is this rising support trend line, right? That little higher low right there. Now that may not last very long, but if that trend line holds up, this could be the end of this move lower, and we could find our way going right back into that original range we started off from earlier on this morning. So really at this point, I think there could be just as much potential for a move down to that measured move as there is all the way back up into that trading range. I see three scenarios: up, down, and sideways being the most likely scenarios for tomorrow. And I'm going to put together three different scenarios and the best ways to trade them here on crude oil. So we'll dig into that chart in just a moment. Over on the S&P here tonight, S&P is a little bit bearish right now, but as you can see, we are very much right in an overall bull market right now, right? Overall, there's a lot of bullish momentum in this market. We get this nice big strong bull channel, and you know, we're right down on the lows of that channel. So we definitely see that momentum going higher here right on the Nasdaq. The big thing for me though right now is we've got this really deep two-legged pullback. 1 and 2. That looks to me like a 1, 2, 3 reversal. So as far as I can tell, yeah, I want to buy this market going back up to retest the high, because we got a bunch of support levels here that I think that are worthy of our attention here right now. But the market's bearish. So really at this point, I'm looking at one of two scenarios. Either one would be a specific seller failure, move back up to retest the high, or two would be a continuation and potentially a move all the way back down to that 27.65 where this whole party began. So we're going to put those planned together here on the S&P in a moment, both long and short here on the S&P. And then, of course, over on the Nasdaq today, Nasdaq looks a whole lot more bullish than the S&P does right now. There's no surprise. You can still see very much a bullish momentum here on that Nasdaq. Big thing in the Nasdaq, though, very easy to see that trading range. And there's one very important clue, and that is that measured move. The measured move is right smack in the middle of that trading range. Now, normally, I'm going to take that trading range, I'm going to copy and paste it down, right? Size of the range, copy and paste it down, and I'll just look to buy going back up, right, around that level of support. But we have a little bit of problem, though, right? Because we got that measured move right in the way there. So well, bottom line is I've got a concern, not about direction, but about location. How do I get into this move to make a profit going back up to retest the high without buying into that measured move? If you follow my newsletter, you know there's one pattern that I love to use when I'm worried about buying into resistance. We're going to break that down on the Nasdaq in just a few moments as well. Over on the gold and euro appear to be duck and cover right now. They are very much in a range bound environment. Gold has that little bit of bullishness to it, right, into this sideways range. Anytime I see a trading range of this magnitude, I'm going to buy low, I'm going to sell high. Really, the only concern I have right now is we got some falling resistance off the highs, some rising support off the lows. With that bullishness going into the range, I've got two types of patterns I'm looking for. One, buying off the low, and the other, selling off the high. Stay away from that middle. That will not be a very good place to be trading. Buying low, selling high. We're going to put that plan together here on that gold in just a few moments. And then, of course, over on the euro, you might want to get the kids out of the room for this one. It's a little bit bloody. This one is a little bit PG-13 here. This one is pretty nasty. You can see this euro all chopped up. We're going to talk about this in a moment. They're waiting on that Brexit vote tomorrow. Not tomorrow, Thursday, I believe it is. We'll talk more about that in a moment. But this could all be leading up to Powell tomorrow, Brexit on Wednesday or Thursday. So this could be a lot of jitters ahead of news right now, but this is very similar to gold. Little bit of a bullishness before we went sideways into this range. Honestly, at this point, I don't think that bullishness is going to have too big of an impact anymore. My job right now on euro is to buy low, sell high, stay away from that middle. And we might just see that breakout tomorrow and get that big measured move top there, 14,350 or so. So we'll put the plan together tonight here for the buy side, the sell side, and what a breakout will look like as well here on that euro. So boy, lots and lots and lots to talk about on tonight's newsletter. But before we jump into those charts tonight, I want to make sure you never miss another great video here at School of Trade. And to do that, to make sure you never miss a great newsletter video, make sure you join our mailing list. All I need is your name, your email address, and then hit that subscribe now button right on the homepage here on our blog at sidewaysmarkets.com. I'll put all the links in the description of that YouTube video. And then don't forget, once you register for our newsletter mailing list, make sure you check your inbox, because I'm going to send you a welcome email with lots of goodies that'll give you the ability to get the most out of our time together every evening on this nightly newsletter. So make sure you don't miss a video. Grab that mailing list, right? Join the mailing list. That way you always get notified every time I publish something new. And also don't forget, as I mentioned earlier, we're going to put the plan together tonight, and we're going to execute that plan tomorrow with all of our clients. We open up our trade room every morning at 8 o'clock Eastern time. I want you to be there with me, but if you can't be there with me tomorrow, the next best thing to do now would be to grab all the charts. All the charts you see me using in tonight's video and all the charts I'll be using tomorrow in our trade room, you can download those by using that big button right below the video tonight on our blog. So take advantage of that. Grab those charts and be ready for tomorrow. And while you're down there, if you have any questions, any comments, any concerns, any feedback, any constructive criticism, I always like to improve this newsletter. If you have any questions or feedback for me, that's what the comment section is for. So drop me a comment, right, for any way I can help your trading career. And while you're down there, make sure you subscribe to our YouTube channel and give me a thumbs up if you like the video, right, while you're down there. And then always don't forget, if you have any questions, you want to call me on the phone, I'm always here. You can call that toll-free phone number in the upper right-hand corner. We got live support up there too. Really, really easy to reach out and get more information. All right, lot to cover here tonight on this video. Let's dive right in here. Get a lot going on here this week. Now, the global calendar is just littered with stuff here this week. You'll notice it is one hell of a week for the U.S., China, and of course, right, Asia. Lots of stuff going on. So what I'm going to do is I'm going to close that one and go right over to the U.S. calendar, because the U.S. calendar is going to be a lot less intimidating, and I want to kind of go over the basic key components of this week. The first thing you want to remember is that we have the end of the month on a Thursday, right? Last day of the month of February. Remember, February only 28 days, unless of course one of those, right, leap years, which I still never pick up on when those happen. They happen every once in a while. I couldn't tell you when the next one is, but they're not this month. So we've got the short week here, end of the month coming in. Now, whenever I have the end of the month, what does that tell me? It tells me volatility. Markets will get more volatile as we go into the end of the month. You know, just like a basketball team gets desperate when the time is running out, right? Traders get desperate when the time is running out to pad their accounts, to get their numbers looking good, right? So the statements look good at the end of the month. So we do start seeing more, desperation, Hail Mary type trades. We see traders getting in, traders unraveling positions into the end of the month. And then usually that volatility carries right into the first couple days of the following month as those traders now reinitiate new trades, right? They manage their portfolio as they go into a new month. So the first thing is going to be market volatility. A second big thing you want to keep an eye on this week is we've got Jerome Powell. He is going to be doing his semi-annually or semi-monthly, whatever they want to call it. This is the annual testimony in front of the Senate, the banking committee on Tuesday and Wednesday. Now, this is big stuff because whenever you have Jerome Powell speaking, you want to look at this. He's usually right around 10 o'clock in the morning, give or take a few ticks here or there. But the bottom line is you want to think of Tuesday and Wednesday as going to be a tale of two sessions. You've got the session before and you've got the session afterwards. The session before is usually where your most reliable trades are going to be. The session afterwards is very much a variable. I have no idea what he's going to say or let alone how the markets will react to what he says. But the bottom line is Tuesday and Wednesday, you want to make your money before Jerome Powell hits the stand, right, on Capitol Hill at 10 o'clock Eastern time tomorrow and Wednesday. So time is really, really tight tomorrow morning. We'll be in our trade room 8 o'clock Eastern time, and hopefully we can find some great setups before it gets too late in the morning. And then again, in the afternoon, it's always a question mark. Sometimes Jerome Powell will say something. He's our Fed chairperson, right? Fed chairman, by the way, here at the Fed in the United States. Sometimes he'll say stuff and the market will just start tearing, right? Or collapsing. And so it's important that we just stay open-minded, right? Keep our eyes open and treat it as we see it after he's done speaking around 10:30, 10:45, 11 o'clock. So think of it as the tale of two sessions, right? The before Powell and the after Powell, right? The BP and the AP. And then we've also got a lot more other news here this week. And there's so much going on here that I wanted to kind of go over this with you here quickly here. Okay, tomorrow, Tuesday, we have that Fed Chair Powell's testimony. Then on Wednesday, right, not tomorrow, but on Wednesday, we're going to hear from Brexit in the pre-market. That's probably what gold and euro are going to be waiting on this week between Fed Chair Powell, right, and the Brexit vote on Wednesday morning, right? Again, we got Powell back at 10 o'clock as well on Wednesday. And then how could we forget? Get your popcorn ready, kids, because on Wednesday, I'm sure there's going to be a whole bunch of hoopla about the summit, right, between Trump, right, and Kim Jong-un, part 2, right? I'm sure part 2 coming here between President Trump, right, and North Korea's Kim Jong-un. That's happening in Vietnam. I'm sure everybody is going to be tuning in to see how that goes on Wednesday. It's definitely difficult for me to anticipate how the market will react to that. I mean, I could see good and bad. Who knows? With President Trump, you never know. With Kim Jong-un, aren't these two perfect to be in the room together? Anyways, Thursday, right? Thursday is that Q4 GDP, right? We got GDP on Thursday morning. That's going to be our big number, right, on Thursday. And then, of course, Friday, we've got that manufacturing PMI. Friday, I'll tell you, Friday could be the day where all hell breaks loose with gold and currencies, because you've got a whole bunch of purchasing managers indexes, right? PMI, inflation, right? PPI, PMI, all the I's, right? The indexes, those are all inflation, right, reports. So, boy, we have no shortage, right, of rapid fire news, right, coming out here. Most important thing, though, for tomorrow is stay focused right now. Tomorrow, of course, is Tuesday. It's before and it's after Powell, right? That's literally all that matters here for tomorrow. Then we'll start to streamline this and nail this down and start to kind of chip away at this week as we get more information. And don't forget, I'm going to do my best here this evening to put the plan together for the overnight and the pre-Powell tomorrow morning. But as always, come join us in our trade room. We open up at 8 o'clock, and we're going to do it all together with all of our clients. All right, I know that took a long time to get through that. I appreciate your patience on that, but I think you can tell it was definitely important that we went over all the different stuff on the calendar here today. All right, looking at the oil, we're going to go oil, S&P, Nasdaq, gold, and of course wrap up tonight on that euro. Big clues right now on this oil. First big clue is that bearish momentum. Anytime I have a bear market, I want to sell at resistance. Second big clue is this strong move lower. Now, I know these are very similar, but just the sheer strength and the distance that was covered here today. You know, we're about $2.50 down, which, you know, as of a couple of years ago, wouldn't have been that big of a deal on oil, but it is a pretty big move in today's personality of oil. So it is a relatively large move down, and oftentimes, whenever I see a market that really makes a large move in one direction, the following day is oftentimes a trading range. And if I see a trading range, ranges always tell me precisely where that level of resistance is, and I can use that to try failure, right, to sell up off of those highs. So I'm definitely watching for that trading range tomorrow. Another clue we see on this chart is the strong move down, the pullback, and the lower low. Anytime we see a strong spike in one direction, again, as I mentioned earlier, President Trump was tweeting this morning. I just love saying the word tweet. It just makes me feel so official every time I say that darn word. I can't believe we live in a world right now where everything revolves around Twitter. But the reality is that, welcome aboard, we're all on the train together, right? So anyways, the White House was tweeting this morning, and that apparently was all it took, right, to get this market pushing lower. I'm obviously joking around with you guys right now, but it literally was just simply one tweet this morning that said, you know, oil prices are too high, and whoops, there we go, right? It's for some reason, though, they don't do that for me when I call the gas station saying these prices are too high here in LA. But the bottom line is, on my opinion aside, though, that spike down, what happens? It leads into that lower low. Anytime I see that lower low, I connect those two lows, I bring them up around those highs, and that's a spike in channel. What does a spike in channel tell me? A spike in channel ultimately tells me, look for the area around the base of that channel and look to sell it back down from there. So spike in channels are really, really valuable patterns because they tell me to expect a pop higher before the market collapses back down again. So spike in channels are really, really important. But I've got one more clue on this, and I know I'm getting lengthy here right now, but that is that rising support trend line. That rising support trend line is no joke because oftentimes when you see rising support trend lines late in a move like this, it leads to a 1-2 failure. And I don't want to get too far ahead of myself because I'm in no way trying to predict this reversal right now. But I'll tell you, we saw this morning. The market started off this morning before Trump got to Twittering here, right? And it was in a range. You know, we opened up this morning inside that range. And guys, how many times do we see a market start off inside of a range, get shaken out with news, and then end up right back into that range by the end of the following day? So again, I definitely don't think we're bullish right now. We're way too early to be buying this market. But I'd be lying to you if I said I wasn't keeping my eyes open right now for some clues I'm looking for, right, to get that market to reverse. So really at this point, I want to kind of play this. We've got three scenarios. The first scenario is I'm expecting to see a range here tomorrow. Big move down. I would expect to see a trading range, especially with Powell speaking tomorrow. You know, again, we're expecting to hear, we're expecting to see, right, a little bit of a trading range down here. That's one one scenario I want to be ready for. The second scenario is going to be if we keep rolling lower, right? I've got that measured move waiting down there, so I want to be ready to capitalize on that, but I don't want to chase after it. The third scenario, which I really hope we get, is if we can get that rally going higher and kind of what that would look like and how that would play out here, right, for a buy going back up to retest that high. So first things first, right, let's think about now, what would it look like if the market goes sideways? Well, first of all, in order for me to get this as a sideways range, I've really got to first start by seeing a double bottom here, right? I want to see a double bottom in price and a bounce back up. If we see a double bottom, and guys, it doesn't need to be an exact double bottom. It could be a little bit higher. You notice right now, it looks like there might actually be a low right there. So it might end up going sideways like this. That's perfectly fine. But if we start going sideways here, right, in the overnight, we're seeing double tops, we're seeing double bottoms. If I see the market turn sideways inside of a trading range, what I can now do is I can take the size of that range now, copy and paste it up, and that will create additional levels of resistance. Then I can try to combine these lows with that low or with that kind of hidden trend line up there and create kind of this little sell zone up top here, right? Kind of follow the bouncing ball here right now. It's a bear market. I want to be a seller at resistance. So once I have my trading range, then I'll be able to define where that range resistance level is up overhead the trading range, and I can combine, right, these levels of resistance together. Once I know where that resistance is, then I look for one, maybe two different types of entry patterns, and they're all based on the two-try failure. For example, the basic two-try pattern will go up once, pull back, try again. Once I see those buyers trying once, trying twice, I can look to sell right back down into that trading range. Now, this is also potentially going to see a big pop. So another thing I want to keep an eye out would be if the market pops a little bit stronger, but then can't hold the pullback. And we'll talk about what a reversal will look like in a second. But if we see it really jump, right? If it really jumps as it goes higher here, the next thing I want to do now is don't try to sell it. I'll look for that nested two-try, that one, that two, and that back down from there. So two different types of, right, failure patterns. One we call a major two-try. The other we'll call a nested two-try. And again, right, we'll look for that if we have a trading range environment. Now, how do you know the difference between these two, right? Whether you want to go the major two-try or the nested two-try. That's a great question. And I cover all the details of the two-try failure pattern inside of our free trading course, which I'll put a link right in the upper right-hand corner. If you're here on the website here on YouTube or on the blog, in that upper right-hand corner, you'll see a big link that will pop up for that free trading class. Grab that free class and learn more about all of my patterns, especially that two-try failure pattern. And if you're here on the blog, there's also a big red button right below the video tonight on the blog, that big red button so you can install the free course, right? And learn all the details of these great patterns. So that's one scenario here for tomorrow. The next scenario is going to be, what if we keep going lower, right? If we keep going lower here, the big problem we're going to run into is we've got that level of support down here, right? If we keep going lower, what I'm going to do is I'm going to try to combine some prior swings with the top of that trend line, right? Top of that channel, and I'm looking for another type of pattern. It's called a trap pattern. So if we come lower here, I'm looking for what's known in the industry as being a bull trap, right? I call these trap patterns. Remember, trap patterns are the most effective pattern when you're concerned with selling into support. So as we go lower, we start running into that measured move area down here. I don't want to sell low, so I start looking for traps, right? And of course, I want to combine that trap along with the high of that channel, right? That spike in channel is an important factor in this. That's our second scenario, right? Now, what's the third? The third, of course, is what I hope we're getting here tonight. I will definitely say my prayers to the trading gods here for tomorrow, but the easiest way to capture a reversal is to let these sellers try once, try twice, and then start looking for that buy going back up to retest the high. Now, what I like to do in these examples, because this market is so bearish here, what you're going to want to wait for is wait for the sellers to try once. We've already got that right now. Then you've got to remember, you don't want to get too greedy and try buying it, right? You don't want to buy it up here, right? You don't want to buy after that first try failure because it's so strong at the downside. So let those sellers give it one more shot, right? Let them try a second time. Once those sellers try once, try twice, now we've got those sellers desperate. And all it takes is a little bit of a nudge going back up, right, to retest that high now. So here's what I always look for. Once I have the bears trying once, trying twice, now I look for that nested two-try failure. I look for the bears to try once inside, twice inside. You know this term, the markets are fractal, right? Ever heard that term before? The markets are fractal. So in other words, I can use a major two-try, but then I can use, and again, this is all because that momentum is so bearish right now, right? I can use the micro or the minor or the inside, or as I call it, the nested two-try. So once I see those sellers trying once, trying twice, then I go, okay, now we've got the bears all roped in. Now let's look for some scalpers down here to wrap that rope around their neck. And once I see them try a second time, we'll probably have that rising support there, and I can buy it all the way back up, again, into that trading range, up around that 57.20, 57.25 area. So really looking great here on this oil. Remember, tomorrow morning, get to it early though, because we got our boy Powell on the microphone at 10 o'clock Eastern time. Now, I'm running late here on time with you guys this afternoon, so let's jump right in now over to the S&P. The S&P 500 is obviously bullish in the long term, but the first big clue here, though, is actually bearish momentum. Now, why would I say bear momentum? Well, because I have a very simple pattern that we talk about a lot in that free trading class, right? The big button below the video tonight. In that free trading class, you'll learn all about what is a 1, 2, 3 reversal. Now, once I see that 1, 2, 3 reversal, now I'm looking for sellers to try to sell this market. But this is where I'm not quite convinced yet these bears really have full control of this market. We do have a long-term bullish trend, and for the most part, if you were to look at this move higher here, this is a very shallow pullback. So although I do think the bears have short-term momentum under control, I do think, though, this market is still primed to go back up to retest the high. I'm always very hesitant to go trying to pick tops and bottoms unless I start seeing, right, real big signs of exhaustion like we're waiting for on oil tomorrow morning. So that bearish momentum, what does the bear momentum tell me to do? It tells me to anticipate that sellers are probably going to try a couple times, maybe twice, once, twice, before I can safely buy this market going back up to retest the high. Okay? Put that in the back pocket and hold on to that idea because we'll talk more about this, right? The next big clue is that bull channel. Anytime I see a bull channel that's this well behaved, great channel rotation, we call this a leg one retest. Anytime I see a bull market with this much strength, I always expect to see a two-legged pullback and a retest of the high. In my trade room, we call that a leg one retest. If you're a client of mine, you know you're looking for that rally going back up to retest the high. Now put those last two clues together. We know we're expecting a retest of that high because this big bull channel, but the bears have momentum. So before we go trying to buy this sucker, we got to let those bears try once, right? Try twice. Yeah, spring training's back in season again, right? Anyways, we're waiting for those buyers now to get their hands on this to get back up to retest the high. It's too bearish, though, right now to try and buy it as it stands. Now we come in to the third big clue. That third big clue is a trading range. Now, we talked about ranges on crude oil. What does a range tell me? It tells me find that range size, copy and paste it down, find support. Now, this is a relatively small range, and whenever I have a relatively small range, I like to use two range expansions. Okay, so when it's a relatively wide range or a normal, well-fed trading range, right, I use one deviation or one range expansion, right? If this range is missing meals and not getting all the diet restrictions right they need, it's a skinny range, right? I use two deviations, right? I'm playing around with you, obviously kidding around, but when that range is small, go 1, 2 below it. Right? Decent size range, just one below it, right? Makes sense? And the reason why you do that is because nobody wants to buy too high right now. They want to buy nice and low. So I know that second deviation down here, and look where we are. We're right at that second deviation, right? So now all of this is starting to come together here, right? We have a bull market overall, but a short-term bear trend. That long-term bull trend tells me deep pullback, retest the high. The short-term bearish momentum tells me you might not want to just buy this. You might want to wait for the sellers to swing and miss a couple times before we get the run back up. And then we have the gift. We have the final clue, which is this falling resistance trend line. That falling resistance trend line tells me one thing. Don't buy into it. Use it as support. Use it as support. We call these two-legged pullback patterns because they have one leg up, two legs. That creates that trend line, and these two-legged pullback patterns, which we see a lot of every day, right, in our trade room. And again, you can learn more about these two-legged pullback patterns by grabbing that free trading course in the upper right-hand corner or that big red button tonight on our trading blog. But that trend line is now a beautiful opportunity here for us. Now, guys, you're probably finishing my sentence right now, but if you don't know what I'm going to say next, here's my plan here for tomorrow. We know we're looking to go back and retest those highs, but because we have that bearish momentum, I want to let these bears try a couple times. And anytime I see these types of environments, I look for one specific type of pattern, and it's what I call a crown reversal pattern. Here's how it works. We let those bears try. Let's do this. Let's zoom a little bit closer here. There we go. There we go. That way we're not straining here to see it. Got our trend line coming down, right? Trend line comes down. Now again, let these bears try once. Then let them try twice. And for these particular environments where the market is overall bullish, but the short-term momentum is bearish, I look for a very specific pattern, which does use in combination that 1, 2 try failure. But the slight difference though is I like to look for traps, right? Trap patterns. Let those bears try once, let those bears try twice, and then trap low and right back up we go. Now we might get lucky on this, right? In all reality, we might get lucky and the market may go all the way down, right? And give us that buy off of that low. Just make sure though, if it really tanks like that, I'm going to do it again, right? So if it does tank like that, I'm going to go 1, 2, and do it again. We'll literally look for the same basic pattern, 1, 2. And again, it's called a crown reversal, and you'll learn all about those patterns in our advanced classes, and you'll learn the basics inside that free trading course. So 1, 2, trap low, back up. Now, a lot of times, though, what's going to happen is this market's going to try to fool you into chasing after it. It may run up, and it may really run. If it really runs, we don't want to buy high. We want to buy low. Where do we do that? Traps. Right? Traps. Look for those trap patterns. Again, trap patterns are great patterns when I don't want to buy into resistance or I don't want to sell into support. All right, guys, really, really good plan there for the S&P to be a buyer. But we can't forget about the big elephant in the room, the sellers, right? What if this market keeps going lower? What would the plan be if this market keeps going lower here? If we see that run lower on strength, this sucker's bearish. And if this thing does turn bearish, I'm going to mark up that low. I'm going to mark up that low, find that new hidden channel, and we are looking to sell this thing off the high of that new hidden channel. So I'm not quite ready to start selling yet, but if we can see another sharp move lower here, I think the writing will be on the wall for those buyers that this is no longer a pullback. This is actually a full-blown reversal. Now, the S&P is a relatively easy chart here tonight. The Nasdaq, very, very similar, as you can see. We've got basically the same basic clues on the Nasdaq. We've got that very sharp 1, 2, 3, a very strong momentum move going lower, which in my opinion, that sharpness away from that moving average definitely gives these bears that little bit of the short-term edge. Now, again, we have that long-term bull channel, and anytime I see a well-behaved channel like that, what do we expect? Two-legged pullback and a retest of that high. So eventually, I do expect this market to want to go back up and retest that high, but in the short term, not so much, right? I got to let those bears try a couple times, right? And then once they exhaust themselves, then I can buy into their failure. Just like the S&P, we also have that trading range, right? What does that trading range tell me? The trading range here tells me, right, it's a relatively small trading range. So of course, right, those skinny, malnourished, right, trading ranges, they're on the Weight Watcher ranges, right? They're counting calories, right? They don't want to fatten up too much there. We'll use 2 deviations down. And again, I'm kidding with you, right? I'm having fun with you. I'm trying to give you some way of reminding, right, or remembering, right, when you see a fat, well-fed range, you use 2 deviations, right? Use 1 deviation. When you see a skinny range, right, use 2 deviations, right? The well-fed ranges, 1 deviation. Skinny ranges or narrow ranges, all kidding aside, right, it's 2 deviations down. And the reason why you want to use 2 deviations down is because nobody wants to buy up here. Nobody wants to buy into that measured move, right? They're going to want to get this price lower. That way they can go back up, right, and retest that high. So the bottom line is trading range is a very big clue. It gives me 1 level of support, but really the support level I want to use is down here, just above that 7,100. That's going to be a really great level of support. And then sure enough, we have that trading range and that trend line coming down, that resistance trend line coming down. And boy, is that an important clue here as well, because that sets us up now for the 2-legged pullback. Let those bears try once, let them try twice, and then we'll get it up and over, right, for that 2-legged pullback going higher. So really there are, 3 basic scenarios. What if price goes sideways to the highs? What if price pulls back? And what if price collapses and reverses here right now? So, like I said earlier, the overall bullishness cannot be denied, but the short-term bearishness is the most important thing right now. Because we are so bearish, 1 and 2 going lower, what I look for in a faster time frame, this is a very slow time frame, on a faster time frame like an 800 tick or a 1000 tick chart, I'll look for that same basic pattern, right? That nested, that 2 try, let those bears try once, let those bears try twice. I'll look for that trap low, right? Those traps are always great opportunities here, right, to be a buyer by buying nice and low. We call that what? A crown reversal pattern. And again, you'll learn all about that pattern inside that free trading course in the upper right-hand corner, or that big red button below the video tonight, right, on our trading blog. So that's the first thing I'm looking for, right, as we try to go higher here. Another thing too would be if we do see it run, right? If it does run, I don't want to chase after it, right? I want to buy into that measured move. I'm going to look for those traps down here and look for, again, right, try to incorporate the 1 try for the bears, the 2 try for the bears, and we're buying into that failure for that rally right back up to retest that high. Another thing you want to keep an eye on for tomorrow is if this bearishness continues and we see another leg lower. I hope that's what we get tomorrow, because then that'll put us right at a series of support levels back here, filling the gap over the weekend, and then giving us a shot here to buy this thing back up. But again, make no mistake about it, that move off the high is very strong. So if we end up seeing it run lower here, I'm still looking for that nested 2 try, that 1, that 2, and then up from there before I look for that buy going back higher. Just because of that overall momentum that we're seeing coming off that high, it's all because of that leg down right there. It really is, because that leg down right there. Very strong jump right off that moving average. And you're right, it's probably just a pullback, but it might not be. And I always want to err on the side of caution when there's money on the line. Now, speaking of erring on the side of caution, how would this thing turn, right? What would a bear market look like? Well, In my opinion, you've got to get below that second range deviation. You've got to really clear this gap area down here. So in my eyes, I want to see that 1, 2, 3 reversal, which means I want to see one leg lower. I want to see a pullback to the moving average, and then a second leg lower. If I can get that second leg going lower now I'm going to mark up that low. I'm going to mark up that new channel now, and we'll now focus on selling off the top of that trading channel. Right? It's always very, very important that we don't try to predict reversals. We wait for those markets to 1, 2, and 3. Then I always want to mark up that first low, because that first low is oftentimes where the best entry comes, right? A few moments later. But really it's that sweet spot between the high of that channel, right, and that low. That's the sweet spot right there. And again, when we get there, we'll look for those 2-try failures, those traps, maybe even some pullbacks, right, as we go lower. And again, I'm going over my basic plan for tomorrow. If you want to learn all my favorite entry patterns, how I draw channels, right, the indicators that we use here at School of Trade, grab that free course, that information icon in the upper right-hand corner, or grab that big red button below the video tonight on our trading blog. All right, Nasdaq is looking pretty good here. Next up, got a bunch of ranges. Now, trading ranges. Whenever I have a range-bound market, it really tells me, 1, find the range. 2, do we have any directional bias? 3, add the range expansions, right? We talk about the fat and the skinny ranges. And then 4, right, is to fade those breakouts. Buy low, sell high, and avoid the middle. So what you want to think about is, and it's going to be the euro as well, on the gold and the euro, and I'm sure a lot of this has to do with the Brexit vote on Wednesday, my boy Jerome Powell tomorrow, right, and Wednesday as well. But the bottom line is, whenever I see a range-bound market, I always know there are 2 basic patterns that I'm looking for. One is going to be our regular major 1-2 failure, and the other is going to be that nested 2-try, right? So you get the 1-2, the major 2-try. And then, of course, in the event that we do see a real strong move down, rather than taking the second try, so literally I look for that inside 2-try, that nested 2-try, which is that 1, 2, and then back up from there. So, you know, literally you can when you see a range like this, these are the 2 patterns I'm looking for. I want to buy low. Again, use the failure patterns. I want to sell high. When the market's range bound, it's balanced. So I never want to trust any breakouts. I never want to trade breakouts anyways, because then you're buying high or selling low. So when I go back to my chart here now, right, on this gold, yes, you can see there's a bullish market before we go into that trading range. Whenever I see a bull market before the range, I always know I have a little bit better chance of being a buyer. But the way this market looks right now, that's from last Friday. We're pretty much balanced here today. I think you'll probably be able to have pretty much some effectiveness buying and selling right now. And ultimately now we want to go up, 1 and 2, back down, go down, 1 and 2, back up, stay away from that middle. I'll tell you, it's always difficult to avoid the middle on these ranges, isn't it? It always is. It's always really difficult to avoid those middles, right? So stay out of that middle, buy that low, and boy, look at that gold right now. A beautiful crown reversal setting up here. Strong move down, right? We've got that trend line coming down. That's the only problem I see right now. But you can see that pattern a mile away. 1 try, 2 try, right back up. Now, of course, with this trend line coming down that I've drawn in here, with that trend line, I'm going to look for a better option here. Go 1, go 2, and look to use that trend line, right, as a lower price. Because the one thing you want to think about right now is how can I stay out of that middle, right? If I buy up here now, I'm buying right inside that range. So I'm not saying that won't be a winner. I'm just saying it's not as desirable here because you're right inside the middle of that range here. And with that falling resistance trend line coming down, it's just not a very attractive trade. This would be a whole lot more attractive if this market could give me another leg lower and then give us that 2 try, right, and give us that run back up into that range. Because then I got plenty of profit to make, right, on the way back higher, right? Would Would you rather make a couple ticks, right, or a whole handful of ticks? It's easy to see why that buy off the low would be a whole lot more desirable. And then again, we go up. Right? You know, same basic patterns, one try, two try, back down, one try, two try, back down. Same basic idea, up, one, two, and back down. Don't forget, keep your eyes open for a possible two-legged pullback going higher as well, right? 1, 2, and back over. Use the 1, 2 try in combination with those trend lines to run this thing back down into that trading range. Now, how do we break out of a range? What does a range breakout look like? Well, you know, more importantly, what does it feel like? Right? What does a range breakout feel like? Well, let's go back and look here at the last 2 times the market tried to break out of this range. What do you see? I see a strong move up. I see a pullback to the moving average. And boy, oh boy, that signal coming off the moving average sure looks bullish, doesn't it? But did it go anywhere? No. How about before that? Strong move up, pullback. Looks pretty strong to me. Does it go anywhere? No. Strong move up, pull back. Boy, looks pretty strong to me. Does it go anywhere? No. So what's the moral of the story here? These breakouts are going to look very convincing, but the reality is it's a range. And so smart traders are looking to go 1, 2, right back down, right into that trading range again. Up, 1, 2, right back down again, right? So we're not going to try to buy just because of a strong move out. What do we need? We want the 1, 2, 3 breakout, right? Very similar to that 1, 2, 3 reversal. Strong move up. Second thing, pull back to the moving average. Third, break up higher. If I can see this market really start to run higher here after we pull back, again, every time they've tried to hold that pullback, they've failed. So if we can get that strong move through, this market will be a successful breakout in that environment. I'll mark up that high, find that low now, and now we know exactly where, right, that sweet spot is, and we can focus on buying off of that low. Okay, now the downside is a little bit more difficult on gold because the downside, we've got these levels of support down here. If I get my ugly mug out of the way there, right? We get some support levels down there. So if we do go lower, it's not going to get very easy to sell short here. 1, 2, 3, that's not going to be easy. If we go lower, I'm telling you right now, we might just end up nested 2 try. 1, 2, and right back up in. So, you know, we may get a breakout tomorrow morning to the downside, but it may not live very long. It may not last very long because we have all of that support down here at that 1324. Now, I know I've covered a lot here tonight, and we're almost done with the video here with you guys. But remember, we're going to go over all this together tomorrow in our trade room. It's a great place to be because that way you can learn the strategy by doing it with me, right, elbow to elbow, right in the trade room tomorrow morning. So don't get overwhelmed here. The markets are a little bit complicated, right? There's a lot to learn, and anybody who tells you that it's simple as trading indicators and buying pullbacks, they're either naive or they're lying to you. The markets are complicated businesses. It's the reason why, right, we get paid so well for our work here in the markets. So give yourself some time, learn the strategy with me, and you'll pick up on these nuances. I really do a lot of the same things over and over each day. Many of you probably have already picked up on that. Last but not least here, over on the euro, woof, man, ugly, right? A chart that only a mother could love right now, right? A strong move up, right, into this trading range. Now, yeah, we do have a bullish market into that trading range, but it's been so darn long since that trading range was here, or since that bullish market. I think at this point now, yeah, there's a little bit of a bull bias to it, but really not that much at this point. You should be able to buy low, sell high, and avoid that middle. If we do get that breakout, I've got my 1 leg, my 2 leg. So if we do see a breakout tomorrow or on Wednesday, again, we've got some major news coming out the next couple of days here. If we do get a breakout tomorrow, right, keep your eyes open. That big measured move there, that big measured move could easily be on our radar here tomorrow. So knowing where that is, knowing that I want to stay out of the middle. Okay, remember, that's always one of the most difficult parts about a trading range environment. Stay out of that middle, buy that low, sell that high. I've got my initial trading range, right? It's a skinny little guy, right? Skinny guy. So I take 1, 2, right? That creates my major resistance. 1 and 2, that creates my major support. But let's not sugarcoat this right now. I want to buy low. I want to sell high. I want to fade those breakouts here. So, right, I want to go down. Let that 1, let that 2 back up into that range. Go up, get the nested, the 1, the 2, back down in. Stay away from that middle, right? Don't be surprised here if we see that 1, 2, two-legged pullback. Then use it 1, 2, right? Incorporate that 1, 2, and then back up into that trading range again. Same basic ideas that we talked about on the gold. A breakout, 1, 2, 3, breakout, mark up that low, find that channel, and buy the pullback of that channel, right? Those hidden channels are great for breakouts. And of course, we're going to put this plan together tomorrow morning, right, when we get together in our trade room. Boy, what a great session here tonight. Had a great day today. We're probably going to have another great day tomorrow. These markets are poised to give us some great opportunities, but don't forget, time is tight tomorrow morning. Pre-news, post-news, come join me and we'll do it together with all of our advanced members. Speaking of our membership packages, we have 3 great levels of membership. Our beginner classes will teach you how to set up your computer, your charting software, all the indicators, all the workspaces, the economic news, all the fundamentals of getting your career started correctly, right, are all included in that beginner course. Then the intermediate course talks about technical analysis, channels, ranges, trend lines, all the technical tools we talked about tonight. You'll learn all of those details inside the intermediate course. And then the advanced course includes everything, all of our tools, our strategy, the cheat sheets, the checklists, and of course, unlimited time together with me every morning in our trade room. And speaking of trade room, open up tomorrow morning, 8 o'clock Eastern time. I would love to see you there with me. If you want a free pass, come out and join me as a guest in the trade room. Grab that free trial right there to the left, right, of my ugly mug. And as always, if you have any questions, call that toll-free phone number. Hit up that live support tool. And boy, oh boy, just in the nick of time, they're going to kick me off this YouTube video here in a second. We'll get out of here. So be well, get out of here, rest up. Tomorrow is certain to be another big day of learning and earning opportunities. Hope you learned a ton. Hope you earn a ton with it. And hope to see you tomorrow in our trade room, right? 8 o'clock Eastern time. As always, my name is Joseph. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.